Hello, guys. Thank you so much for tuning in on our weekly podcast where we talk about the markets, particularly focusing on the US and Canada. But we also talk about other opportunities as we see them outside of these two countries. Today, as usual, I have my colleague, trusted money coach, Coach Blooming. Welcome and good to see you again, my friend.
Happy Friday. It's an exciting Friday. The market is literally green today. Let's see how we're going to close in the next 1 hour, 40 minutes.
Fantastic. So let's get right into the business of the day. So there are a lot of things that are happening in the market. Yesterday, President Trump visited the Fed building, and which was a bit dramatic, but I'm glad it didn't end up with the worst case scenario, having the Fed chair being fired. And we also have companies that have been reporting earnings. We have your favorite business that you are invested in, Tesla, Google, and a couple of other big names that reported earnings. So in this conversation, we are going to dive into that, what we think. But like we always share on this platform, this conversation is two friends having conversations. This should not be taken as investment advice. My friend is very good at summarizing what's been happening in the market. Coach, over to you. Can you summarize for us what has been happening in the market this week? And then we can then do an analysis and our insights. Over to you.
So I think the market has been smiling literally this week. Earnings has been pretty strong. When Alphabet reported on, I think Wednesday, I mean, personally, I thought that the earnings was strong, but after I think during the earnings call, then the stock price started to drop. The same thing for Tesla. Tesla, oh, the earnings report for Tesla wasn't that great. Like the earnings was super low, and I wasn't even surprised when the stock dropped so low the following day. But today that it's Friday that we're recording this, at least it has already rebounded. It's already in the 317, 316ish, so it's way much better than where it was yesterday. But aside from that, we're seeing Nvidia still reaching all-time high, Palantir reaching all-time high. Amazon was the last time I checked 232. I mean, Apple too is already going up a little bit. So again, the market is just really optimistic. We saw a lot of banks also reported, and the earnings was pretty good. So I just feel like the economy, especially the U.S. economy, is pretty strong. And going into the later half of the year, I'm still super bullish on what the market is going to give us as investors. So yeah, that's just my take.
That's fantastic. I recall, and I was talking with my uncle today about this, that Warren Buffett always cautions people that never bet against the US market, And I can imagine in April, the S&P 500 dropped almost close to the bear territory. That is a 20% drop. But right now, it's hitting all-time highs, highs after highs. And for me, the way that I look at it is like if you are invested for the long term, and especially wonderful businesses, that is businesses that have strong fundamentals, and if you get in at a good price, over the long term, the chances of losing money, at least statistically, they are lower, judging by the past performance. So what do you see as risks, coach? Because there are always risks, and sometimes we joke with, my friends and even yourself, coach, that sometimes it seems like maybe only the stocks that you hold are the ones that are not going up. If you try to then jump into another stock, then as soon as you buy, then it doesn't go up. And you look at the other stocks that are around, they are flying up. So, that's what do you see as risks and opportunities? For me, what I see as the risk is that the market does not always go up, you know, and I think the ripple effect of the tariffs could potentially, if there is economic data that is negative, maybe for example inflation, that might be something that might cause the equities market, particularly in the US, to drop. But again, nobody can predict that with confidence. I was also afraid that if the Fed chair is fired, technically, which the US Supreme Court said he can't be fired without cause, that was also going to cause, a challenge in terms of, the monetary policy, the perception, because what happens with the Fed, the Fed, they can set the short term, they can impact the short term interest rates, but the longer term interest rate, like we are talking of interest rates, like for the mortgages and all those other things that can be priced in, they mostly kind of like look at the combination of the politics, macroeconomics. So that is something that I think even if the current administration in Washington tries to influence, they can't, at least historically. So that's something that I think. So, coach, opportunities, risks that you see in this market over.
So yeah, again, yesterday I was looking at the fear and greed index, and it was literally sitting at 75, meaning that we are in the greed territory, and maybe if I were to check it right now, we might even be in extreme greed. So for me as an investor and as a student of the market, I just know that this might not be a good time to start piling in a lot of money, especially for securities that has already run up. For example, I'm looking at Nvidia at 174. I'm looking at Palantir at around $160. I mean, for anybody that doesn't have a position in some of the securities and now you want to start a position, I would say it might be a good time to just wait for a pullback, because there is no way the market can keep going on like this. For example, we're still looking at August 1st, which is the hard deadline for the tariff. Anything can still spook the market, anything, we just don't know. But I'm just glad that at least the US economy is very strong. We're seeing our portfolio rise. But even despite all of this, I'm being selective in the types of securities that I'm even buying. For me personally, what am I doing? I'm only exposing myself to Ethereum treasury companies. That's something that I want to get some exposure into. I already built a position into Meta Planet, which I shared in the last episode. But apart from that, for every other security that has gone up, the only thing I'm also doing, selling covered calls. So again, I'm not actively buying those ones that have gone up because I'm expecting a pullback. There is no way the market can keep going up like this, and that is just what I think about the risk of just buying at the top. You might say that, oh, maybe I'm going to keep waiting until the perfect time. No, you're not waiting until the perfect time. I just know that when the VIX is literally, I think that I looked at the number yesterday, it was already hovering around 15, which is telling me that the market is stable. So in comparison to the fear and greed index, which is already at the is already at the greed territory, or maybe it's already showing extreme greed now. I don't even know. But I would just be very cautious when it comes to buying at the top. Maybe for securities that are already like Tesla. Okay, I didn't buy Tesla again because I've been buying in the 290s, 280s, 230s. But yeah, but that's just my own take. I mean, for any security that has been down, you can still buy. But for those ones that have been at all-time highs, I would be cautious. So that's my take, coach.
Fantastic. And I've been also, thinking of using covered calls, not on the equity side, but on the VIX, right? Because right now it's lower. I got, I have some cash secured puts, but also I'm buying some shares at these levels. And what I'm doing is like, I'm now considering doing covered calls so that I can have some sort of like guaranteed income. For those who don't know, covered calls is like you should own at least like 100 shares per, to get one contract. So let's say today Tesla is trading at 312, and then let's say, hopefully, I mean, preferably your average, let's say it's 300. So if you do a covered call, you say, if you go 1 month out and let's say strike price of 350, you would say, okay, I'm going to open the position by selling a call option. In other words, if it goes up to 350, you can still make that profit, but you can be paid for that, because the risk is that it can potentially go to 500 or lower, right? But the idea is, if you do that every week or every month, you collect that premium. That's a strategy that Coach Blooming and I also employ. I also only do that on companies that I understand, when they retrace to certain levels. I do that with cash secured puts. In other words, I'm betting, I'm bullish. It's a bullish strategy. But the idea is, if the particular stock that I'm looking at drops, I'm still covered, in the way, because let's say 8 STS 8 STS, for example, now it's trading at 54. I did a cash secured put for the strike price of 50, right? And I got paid, I think that was 325, 3.25. Then you multiply by 100 shares. So 1 month out, if it doesn't get to $50, right? If it is above $50 on 1 month out when the contract expires, I'll still keep the money, right? So that's kind of a way that I do. Now, as we wrap up, I wanted to also mention that Coach Blooming and I, we do some coaching, guys. I always tell people to say, look, one thing that you can always do is to educate yourself. You don't necessarily have to come to us, even though it would be nice. But Coach Blooming has a fantastic masterclass where he will be teaching people how to invest. And the good thing is, Coach Blooming and myself, we have some portfolios, but we just don't share those things. It's a bit personal. But if you become a student, we'll be happy to share with you guys, because that's the idea. And investing is personal. Coach, I want you to give your closing remarks or anything that you want to share. But I just wanted to share a note that if you want to learn more about this, you have to pay some tuition and learn. But even just watching this is a very good starting point. Thank you.
So again, as a student of the market, there's so many strategies that we can adopt to make money in the market. And for people that are not even in the market yet, meaning you're not even invested in any stock, in any ETF, mutual funds, nothing like that. As I always say, virtually on every episode, is to educate yourself. What am I doing? Yes, I'm having a masterclass where I'm going to literally teach you step by step how to invest in the stock market. But to be honest, that is just the beginner step. There's a higher step when we start talking about options trading. Because why? Once you understand the money game, they're just Isaac and I were just talking about cash secure put, talking about covered call, talking about leaps. I mean, these are strategies that one can use to just compound and grow your wealth over time. But it comes with educating yourself first. And if this is something you're interested in, again, the information is going to be in the description and also in the comments. Register if this is something that you feel like you're going to benefit from. But again, I'm only going to be sharing how I've been able to build my portfolio within the space of 5 years to almost $500,000. Again, investing, as I always say, is a learnable skill. You can learn this thing. This is not rocket science. But sometimes you just need to know where to navigate so that you don't fall into the wrong traps. So that's my spiel for today. As always, may the market be in our favor.
That's wonderful. So if you want to reach out to me, it's www.streetwiseeconomics.com, or you can subscribe to our channel. My friend's website is www.bloomingumoring.com, and she also has a YouTube channel, Blooming Umoring, and we also share our insights regularly on our social media platform. Again, as usual, trade and invest wisely, and may the markets be on your side. We'll see you in the next episode. Bye bye, and thank you for tuning in.